What's good? Welcome back to another episode of Where the Money At. We're on episode 39, and you know we keeping it rocking and rolling, and you know we locked in on cryptocurrency right now. So today we're going to do a little bit of Bitcoin technical analysis. We're going to talk about how Robinhood is expanding its cryptocurrencies operation out there in Europe. We're going to talk about the infrastructure that's being built for cryptocurrency around the world for 2024 and beyond. And then we're going to get into stablecoin use cases, how foreign exchange plays into that, and a couple other things. So let's get right into it. Let me share my screen. So let's look at CoinGecko here. Refresh the page. We have Bitcoin sitting at 35,600. We've had a pretty decent week, going up about 3%. We have Ethereum sitting at 1,900, which is pretty crazy. We have BNB sitting at around $247, and XRP sitting at almost 70 cents with a crazy run up of 14% in 1 week. But, you know, there's a lot of prices and tokens we can get into, but let's just actually dive into some Bitcoin technical analysis really quickly. So let's look at the new range that we could possibly be forming. And it's looking like it's going to be in between 36,000 and roughly 33,000, 33,500. It's looking like we're going to stay in here a little bit. And, you know, if you're a trader, that's where you want to live. And actually, it adds up if we look at the fib retracements coming from the all-time high of 70,000 to our local low of 15,000. We're right in the golden range between the 236 and the 382. So it's looking like we're probably going to live here for a while, between 35.6 and 27.9. I highly doubt we go that low, but hey, who knows, you know? But let's check one more fib just to make sure, from the local low of 16,000 to our local high of 35,000. We're in the red box, so it's looking like we could be between still 35.6 and 30,000, 31,000. So that's kind of where everything is adding up right now. But let's take a step back and, you know, just for shits and giggles, let's look at some momentum indicators. Let's look at the RSI. And I like looking at the RSI and the MACD on weekly time frames. So what the RSI is telling us as far as momentum goes on the weekly is, you know, we could have a little bit room to move down. We're at the top, which means, you know, we may be overbought right now. We have a little bit more pressure to go down. But if we look at the MACD, it's saying we have, you know, possibly some more momentum to keep going. You know, so you have to take all these indicators with a grain of salt because, you know, nothing is 100% correct. But, you know, it gives us a decent idea of what could possibly happen. Let's look at these things on the monthly. Let's look at the RSI on the monthly. We're kind of right in the middle, no man's land. We're a little bit more to the overbought side, so we could come down a little bit to bring the momentum right towards even. But we'll see. Let's check the MACD on the monthly right before we wrap this up. It's looking like on the monthly we have it's picking up steam. And it says we have more opportunity to head to the upside. But if we really look at it, I mean, from the beginning of the year, January 1st to now, I mean, we're up roughly 114%, which is an amazing year for an asset class. Now, that has nothing on when we started the run from 2020 and ended that year roughly, let's just go to how high we were. 530%. So to say we're up 100% and we can't go higher will be ridiculous. But, you know, there is diminishing returns and, you know, these pumps get smaller and smaller. But, you know, from what I look like, from what I'm seeing, I personally believe, and none of this is financial advice, I believe, you know, we may have a little bit more room to either stay in this area and crab walk sideways or go down a little more before we start to take off into that brand new cycle. But that's it for price action. You know what I'm saying? It's not about that. It's about executing your plan. You know what I'm saying? Don't let this price action move you off your plan. So let's get into the news. We got Robinhood. Robinhood to expand crypto trading into EU, plans to start UK brokerage. Says it's the crypto trading platform is coming in a couple of weeks, said the company. So I'm not going to get too deep into the weeds of it, but what they're saying is they're building infrastructure for 2024 and beyond. So that's very, very bullish news for the space as a whole. And it's going to be, we're going to hear a lot more about this. And that gives me a lot of upside and optimism in the future about what this space could do. But there's one thing I really, really wanted to point out right here. Robinhood also said in its earnings statements that its crypto-related revenue for the third quarter fell 55% to 23 million from the same quarter 1 year earlier. So a year ago, they were making 45 million per quarter, which is like what, 180 million per year, damn near 200 million per year from crypto related trading. So if you think, if you're in that rare camp that believes crypto is still a fraud and gonna go away, and regulation is gonna, you know what I'm saying, governments are gonna stamp it out, with companies, with one company like Robinhood making 200 million per year from this division, is not going anywhere. And as a matter of fact, I would like to take a bet that it's gonna expand. But let's just get into some more news about higher, more infrastructure coming into the space. I can't say this. Deutsche Bros. We'll just call it DB. DB to launch cryptocurrency exchange in 2024. What is DB? Who is DB? One of Europe's largest stock exchange groups plans to launch a regulated cryptocurrency exchange in 2024. Another crypto exchange coming out. You know what I'm saying? And if you go a little bit further in this article, not to get off topic, but they say HSBS confirms plan for digital asset custodies in the future. So all this is to say more and more infrastructure is being built for the future. So we need to start taking digital assets, tokenization, programmable money, having assets on chain. You need to start researching those four things and more topics to understand where we're going in the future, to put yourself in the best position to find opportunities. Because yes, there's going to be opportunities with these coins and new coins coming out, but it's going to be way bigger than that. You may look, I can't tell you what opportunities you may find because you never know. It's the future. But let's get back on subject. DB progresses with D7 digital securities. Beyond crypto, DB is active in tokenized securities, funds, and alternative assets, tokenizing everything. So we can kind of see from what all the information we deduce that in the future, digital assets are going to be a serious thing, and everything that we have right now in traditional finance could possibly move on chain. Its D7 Digital Securities Registry is based on DLT, distributed ledger technology, although the platform is currently centralized. So far, there have been 4,000 digital securities issued on the platform worth more than $3 billion. Now, this is keep in mind, this is an ad piece. You know what I'm saying? So pretty sure they paid for it. So, these are just numbers. Don't take these numbers too seriously. But what they're saying is there's a lot of securities and a lot of money being put on in these things. So let's just keep our eye out for that. And, this is DB. Like, who is DB? I looked them up. They've been around since '92, founded in Frankfurt, Germany. They brought in, as far as 2020, 3.2 billion. Their CEO has been there since 2018, so I guess he's kind of holding it down. And I looked at their stock price, and they have been on a steady increase ever since 2008. But all businesses have been able to go on a tear since 2008, and we've been in an environment that pumped a lot of money into the market and gave businesses a leg up. So we're going to see how they do in the next 10 years, but they are a decent sized player, and they're preparing to have cryptocurrency exchanges in 2024 and moving beyond. So that's infrastructure. And the last thing I want to discuss today is some more stablecoin use cases and how foreign exchange can be integrated with this. So let's kind of get into it. I'll let them talk. And by the way, this whole panel was amazing. I'll drop the link below so you can go check it out yourself, but I'm gonna just break it into two parts. Let's get into it.
Something that you think about as well?
Yeah, not so much, but I think it is important to think about these stable coins in the context of what use cases that are getting utilized, right? So both David and Shruti talked about different use cases, trading-related use cases where stable coins are highly appropriate to use for trade and settlement. But there's also a number of other use cases that's starting to get utilized. For example, remittance is a great place where it could potentially serve. But stable coins fall into this category of wherever you have a transaction that is limited in scope, can get settled quickly, it gets utilized really, really well. But there are other use cases where you need either a real-world asset settlement or a real estate settlement or lending involved, where banks play a much bigger role. And there, another form of currency may be quite interesting as well. So we're starting to look at tokenized forms of deposits, which is really wrapping what's available in bank money, which turns out, I think stablecoin, depending on which ones you count, which ones you don't, there's about 100 billion or so in stablecoins. But the bank money is, I think, as of last time I checked, $17 trillion.
So what he discussed here was some situations in which stablecoins could be great, small transactions where things can be done very fast. And then there are some situations where, maybe not all stablecoins, but, there are some out there that could be, where stablecoins could not be the greatest, opportunity, where it's like, housing transactions, stock transactions. But in the future, I'm pretty sure there's so many people building out there right now that they're preparing for these scenarios and getting their future stablecoin projects prepared to handle larger situations. And there's one other point that I want to get to. Everybody on this panel was great. This lady really, really broke down some good stablecoin cases. This gentleman from MasterCard, we just listened to him, and now we're going to listen to this gentleman right here.
Rally in crypto trading going higher. Do you see a pullback in the popularity of tokenization of real world assets as a result? David?
Yeah, I think that there's a short-term cycle and a longer-term cycle. I think real-world assets, it's had many different labels and titles. Back in 2017, it was security token offerings. That was kind of the first concept of it, and people were talking about tokenizing art and real estate. And so we've seen these sort of like mini cycles of interest, boom and bust. But I think, and it's a long process, right? The evolution of real-world assets and tokenization in general starts with stablecoins. I think that's the fundamental building block. Now we have a framework for connecting traditional assets to a layer one or to a public blockchain. Next is going to be foreign exchange, where we have right now 99% of stablecoins are USD based, sort of the reserve currency of crypto trading. So we'll see FX markets start to move in that fashion under the same framework. At the same time, we have started to see regulators, like very well-respected regulators in developed economies, start to actually work together on a real regulatory framework to allow this, and start to have pilot programs and sandboxes working with some of the largest financial institutions in the world and asset managers. And so through that framework, it's going to take time to build that out, of course, because we're connecting a system that's been around for 100 plus years with a technology that's been around for 10 to 15 years.
So what he talked about was bringing assets on chain, and he talked about the fact that 99% of cryptocurrency or stable coins are USD based, and when FX come in, foreign exchange comes in, it's going to be a little different. And he says there's going to be a lot of opportunity there. So that's just a couple things I wanted to discuss today. I'm trying to get this content out to everybody a little bit more regularly, but everybody got their own things going on. So like always, man, I appreciate y'all for rocking with me, and I'm gonna definitely holler at y'all later.